Hello, fellow traders. Tis I, TheRumpledOne, coming to you on Tuesday, May the 23rd. The year's 2023. Let's talk trading. Feedback with Walmal. These videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. Walmal, yesterday I was talking to the traders about feedback and how every trade gives you feedback.
Okay. Well, yeah, I'm by trade. My first degree was in engineering, and engineering is it's a school of thought of just constant feedback. Everything you do in engineering is feedback. You build a bridge so strong to go and hold whatever is going to be put on that bridge, and then you collect data to see if it's holding it and how well it's holding it. And then for your next bridge, you take that information, you feed it back into the system, and you just on and on and on, and that's how you go and improve things. So we as a race of human beings, that's what we depend on in many of the things that we build, and which makes sense because even though human body does the same thing, it's the type of thing where we're constantly sensing. For instance, is it cold out? Is it warm out? If it's warm out, our body, what does it do? It likes to go, keep things in a nice even keel. And so what does it do? If we're too warm, it starts to sweat in an effort to try to cool the body off. And if it's too cold, it starts to shiver to try to warm the body back up. Well, why wouldn't markets then react the same way? It's a type of thing where it just constantly we're trying to go and, figure out what's going on. And I'm not sure what you have up, sir, but if you look at the 1 minute chart, and you look out there and you just look over the last hour or so, what we see is that, hey, it gets to about 90 and maybe a little bit above it, and it just turns around and goes back the other way. And so we should be getting some feedback. Hey, that 90 line is pretty stinking strong. And for whatever reason, it's just not wanting to break. And that should be going into our thought process. And if you look at the bottom side, it really has different levels that it goes and returns to it. So we could go and say, let's go and take some feedback off of that. It likes to get to the 90. Maybe 90 is a good target place to go and try to target price to get to. Now let's look at the bottom. And when we get to a bottom, start looking for a place where we get a clear signal that's going to start going back up. And we can go and build a rationale for taking a trade at the bottom and targeting that 90 area and using that as feedback, and using that as positive feedback because we're able to go and take some pips. And that's the great thing about feedback is we're able to just refine the system and just keep on refining the system, using the tools that are in our tool chest and just constantly using that. But at the same time, looking at the market, looking at what it's doing. I think I say this to you, Tiro, all the time. You'll sometimes say, why are you looking to get out there? Why are you looking? What do you usually say? The words you use is, what are you targeting? And what I usually say is I'm targeting this area. Why? Because that was an area of trouble for the market, in the past hour. I only like to go and look out maybe an hour, maybe 2 hours if I have to. But generally speaking, on my charts, if I'm targeting an area, I'm only targeting maybe 61-minute candles. That's as far back as I want to go look. And that gives me a good indication. Now, if there's nothing there and it's just clear white space on my screen, that's when I'll start looking back further and say, wow, we're in a void here where it could go for a long ways. And then I'll start looking at other things. But generally speaking, that's what I tend to go and look at. So that's my idea of feedback, Now, the second part of it is there's two things. You got positive feedback and you got negative feedback. Positive feedback, I think we covered pretty well already. But negative feedback, unfortunately, I think gets into the psychology of things. And what I mean by that is you wind up going and feeding into your brain, things that happened that were quote unquote good things because you had a winning trade that maybe was based off of faulty information. You just got lucky because the market happened to go in your direction, even though you broke your rules, you did everything you weren't supposed to do, and now you're taking that as feedback and saying, "Oh, I can do that. I can do that again." And the next time you get slammed, and that's negative feedback because what you're doing is you're breaking your system down, and we need to be very careful of that side of that side of the equation as well.
Yeah, exactly.
So and if you look at like I said, just 90 line. I made core this hour, within the last hour, just constantly just going and just saying, hey, this is a pretty strong place to go and look to get out. And admittedly, I think once, maybe twice actually, I said, okay, we've hit this thing 3-4 times. It's got to break. And I put a trade in there, and guess what? It didn't break it. And so those were losing trades. But I was able to go and stay positive about it because when it went to the lower end, and I saw a trade going back up, I had signals to go back up to that 90 area. I was able to go in, when it got back up there, it probably got out at break even, or I got out at, maybe a little bit of a loss, a pip and a half loss, something like that. And, and you made your money up on the other end. Now, I would have been much, much happier if I had just gone and not taken that trade. But, I'm going to be honest with you, I was looking for a breakout, at that 90 level because, all those levels, all the support levels, all the resistance levels, eventually, just about every one of them, not every one of them, but just about every one of them, eventually does get broken. And when it gets broken, what can happen is you get a really nice trade where you can go and, I say all the time, I want to pick up 1, 2, 3, maybe 5 pips. But every once in a while, you get that lucky trade where it breaks it, and you pick up 10, 15, 20 pips on it, on a break of that. And can it happen during news events? Sure it can, but it doesn't have to. It could just be a technical reason where the dam just literally gives way. When that dam gives way, you can go and ride that wave.
Yeah, that's the one thing you were saying about the market smiles upon you, you get lucky even though you did everything wrong. On the flip side, you could do everything right, and the market says, I'm going to take some from you.
Yeah, exactly right. And that can be, and the problem with that, or the thing about that is, I won't say the problem because that's not an accurate description, but the thing about that is that, positive the positive feedback on that would be, yeah, that's what the market does sometimes. I just got to be aware of that and make sure I'm in tune with the market and recognize that, hey, it's just not working this time, and take my exit while I can, and minimize my loss. Make sure that I've got things in place that go and prevent me from taking a big loss during that period of time, and that can be a positive thing, and then the negative side of that is if all of a sudden I'm taking my system that's a proven system that works, and now I start putting in rules in place that prevent the winning times, because I can over mitigate losses. And what I mean by that is that if I put enough rules in there, what can very easily happen is I never take a trade, or as soon as, I get into a trade, and as soon as I go in up a half a pip, I start getting worried. It's sort of like you had said to me earlier, hey, that's the third, I think I went long, and you said that's the third, up candle in a row. And yeah, it was. But my
No, that was the short. No, that was that short.
Right.
Yeah.
Yeah, and my system says I can still take a trade there. I know generally you don't like to take a trade there, but I or you're very wary of taking a trade there. I don't have a problem with that. It's and I got all the other things in it there, but the problem, well, not the problem, but the thing in there for me is that if I go and stop taking those trades, then that's money that I wound up leaving on the table. And in that particular case, it was the type of thing where I think I made 4 pips on that trade, if I recall correctly. So it was a nice little trade.
Yeah, because I think you got in on the third third one down, the next one was a doji, and then it broke down like another 2 or 3 pips, and then you were out.
Yeah.
But you know, if you
Yeah.
look
And
left,
so
there was a 1 minute return bar. I don't know if you were targeting that open or not, because that open was
I
down at
was.
79.9.
Yeah.
Yeah.
Yep. That's where I was trying to get to. Yeah. And the thing is, I didn't break any rules, but my point is that, if I, let's say I had taken a loss on that, you know, and now I put a rule in there that says I can't do this, and I wind up going and creating, creating a situation where I live in nothing but a land of rules. Um, First of all, I'm not going to be able to process all those rules, in time to actually take the trades. And the second thing is that I may actually go and put myself in a situation I can never take a trade. That can very easily happen. And I mean, not to get political or anything, but that's one of the things that that people are complaining about. Some of the things that are going on, legislatively. And every time we turn around, there's a new rule, a new law that goes into place, and so like we don't have any freedom to do anything anymore. Well, yeah, you can look at that politically from that perspective. On trading, the perspective is if I put all these rules in place, I can't get into the trade. or worse yet, I've put so many rules in, I can't get out of the trade.
Right.
And next, you're taking a big loss, or you're leaving your big win on the table.
Exactly.
And you left it, and next, you're taking a small win. And we have to be very, very careful of that. So that's kind of my idea with feedback. And it's you just got to remember that what feedback is. It's a loop, and what you're constantly doing is the information that you're taking or observing goes back in to into how you make decisions. And even if you say you don't, you do, because it's just part of human nature that we just constantly are taking what we observe, and it just becomes part of our thought process. It's sort of like, something happens in life, and you just become more guarded about certain things, or you become more willing to do certain things just because of what you observe. And that affects our trading as well. We do the same thing in trading.
Yeah, that's for sure. Like for example, here, if I was long and I see that one ball, I usually jump out because more times than not, it's going to push against me. And I leave pips on the table, but
because it doesn't happen all the time.
Yeah.
And it's sort of like, and it shows you the difference between trading, because I look at that as an opportunity, because I look at it as, okay, I'm not going to jump in here on the big candle, but what I'm going to do is I'm going to hope that the next candle, the current candle, we're in candle 0 right now, I'm going to hope that that's a compressed candle. Unfortunately, it turned into not being a compressed candle. But the reason was because my observation is that when we've had a compressed candle, the next candle after that is a candle that explodes.
Right. Well, this one just exploded for about 3 pips.
Yeah, and that just shows you what happens if with what observation is, it doesn't happen every time. And that's what we got to remember. It's just observation. It's just what we see from experience. It doesn't mean that it's going to happen every time. And if we build our trading plan based around things that we think are going to happen every time, we're going to be sorely mistaken, because it doesn't happen all the time. The market is, she's random, and and or actually a better term for it, a mathematical term would be it's chaos. What that means is it's going to get from point A to point B. I don't know how it's going to get there, but it's not going to, more times than not, it's not going to be a straight line.
Right.
That almost never happens.
Yeah.
Because you've got different people arguing.
Yeah. So, fellow traders, you have Walmal's feedback, and then you have the feedback that I talked about yesterday. So perhaps you can tell us what feedback you're having. Because remember, when you're at your trading platform, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.